First, President Trump just dropped a bombshell that sent shockwaves through Wall Street and the housing market. On Wednesday, January 8th, 2026, he announced on Truth Social that he's immediately taking steps to ban large institutional investors from buying more single-family homes and will be calling on Congress to make it law. His exact words were simple but powerful. People live in homes, not corporations. The market reaction was instant and brutal. Blackstone stock crashed 9% within hours of the announcement. American Homes 4 rent plummeted 6.3% before trading was halted for volatility. Invitation Homes, the largest single-family rental company in America, dropped over 7%. Even investment giant Apollo Global Management fell more than 5%. But here's what caught my attention. This isn't just about a policy announcement that may or may not happen. This is about a housing market that's so broken, so unaffordable, that even a Republican president is willing to take on Wall Street to try to fix it. Because right now, 75% of homes in America are unaffordable for most Americans. The median home price just hit $433,214. And to afford that median home, you need to make at least $126,700 per year. That means only 6 million out of 46 million renters in this country can even qualify. So the question isn't whether Trump's plan will work. The question is what happens next to the millions of Americans who are completely priced out of home ownership, and what this means for anyone who owns real estate, REITs, or is trying to build wealth through property. Let me break down what's really happening here, because this goes way deeper than just banning a few big investors. To understand why Trump is taking such drastic action, you need to see just how broken the housing market has become. And I'm talking broken in ways that most people don't fully grasp. Let's start with the basic math. The median home price in America right now is $433,014. To afford that home with a typical mortgage, you need to make $126,700 per year. That's more than double the median household income in most parts of the country. Here's how insane this has gotten. A typical monthly mortgage payment on that median-priced home is now out, but here's the kicker. That $2,570 payment eats up 47.7% of the median household's entire income. The rule of thumb has always been that housing should cost no more than 30% of your income. We're now at nearly 48%. That's not sustainable for most families, and it's getting worse fast. Home prices have surged 60% since 2019. Meanwhile, wages have only increased about 29% over the same period. So housing costs are rising more than twice as fast as people's ability to pay for them. This is why first-time home buyers now represent just 24% of all home purchases. Back in 2010, first-time buyers made up 50% of the market. We've literally cut first-time home ownership in half. The typical first-time home buyer today is 40 years old. Let me repeat that, 40 years old. 5 years ago, the typical first-time buyer was 33. We're pushing home ownership further and further out of reach for an entire generation. And here's the stat that should terrify anyone thinking about the future of the economy. Only 6 million out of 46 million renters in America can afford to buy a home at current prices and rates. That's 13%. In 99% of counties across America, homes are less affordable than their historical averages. We're not talking about expensive coastal cities. We're talking about nearly everywhere in the country. So when Trump says the American dream is out of reach, the numbers back him up. But the question is whether banning institutional investors will actually fix any of this. So what exactly did Trump announce? The details are surprisingly thin, which tells us this is more about setting direction than having a fully formed policy. Trump posted on Truth Social that he's immediately taking steps to ban large institutional investors from buying more single-family homes, and will call on Congress to codify it into law. That's it. No specifics on what counts as a large institutional investor, no timeline, no enforcement mechanism. The White House declined to provide more details when reporters asked. Trump said he would outline additional housing proposals at the World Economic Forum in Davos later this month, but that hasn't happened yet. Here's what we do know. This would require both executive action and congressional legislation to have any real teeth. An executive order can set policy for federal agencies, but it can't actually ban private companies from buying homes. That requires Congress to pass a law. And here's where it gets interesting. This proposal has rare bipartisan support. Senator Bernie Sanders co-sponsored a similar bill called the Humans Over Private Equity for Homeownership Act back in February 2025. Democratic Senators Jeff Merkley, Chris Van Hollen, Ruben Gallego, Angus King, and Mark Kelly all supported it. On the Republican side, Senator Bernie Moreno from Ohio tweeted that he'll introduce legislation in the Senate to codify this ban into law within days of Trump's announcement. TD Cowen analyst Jarrett Seiberg expects both the House and Senate to pass bipartisan bills implementing Trump's directive. His reasoning: we appreciate that many important congressional Republicans have opposed this in the past. Our view is that they will concede on this issue rather than fight the president. But here's the massive unknown. What exactly counts as a large institutional investor? Is it companies that own 100 homes, 1,000 homes, 10,000 homes? Does it include pension funds, insurance companies, foreign investors, real estate investment trusts? The National Rental Home Association Council, which represents many of these companies, issued a careful statement saying they look forward to engaging with the White House and other policymakers in this important discussion. Translation: they're getting their lawyers ready. 4. This is where things get really interesting, because depending on who you ask, institutional investors either barely exist in the housing market or they're taking over everything. The truth is somewhere in the middle, but it's way more complicated than most people realize. Now let's start with what the big players are saying. Blackstone, one of the largest institutional investors in single-family homes, claims that institutions only own 0.5% of all single-family homes in the United States, half of 1%. That sounds like basically nothing. But then you have the American Enterprise Institute saying institutions own about 1% of total single-family housing stock. Still pretty small. Then you have the Government Accountability Office putting the number at around 3% of all single-family homes, 3 times higher than Blackstone's claim. So who's right? Well, they're all probably right, depending on how they're counting. But here's why those numbers are misleading. The real story isn't about how many homes institutions own total. It's about how many homes they're buying right now, when supply is already tight. In 2025, real estate investors bought 30% of all single-family homes that were sold. 30%? That's not mom and pop. Landlords buying a duplex. That includes everything from small investors to massive institutional players. And here's the breakdown that matters. Medium-sized investors, those owning 10 to 99 properties, doubled their market share from 6% in June 2024 to 10% in June 2025. Small investors with fewer than 10 properties still hold the biggest chunk at 14% of all purchases. Large investors owning 101 to 1,000 properties account for 3% of purchases. And mega investors with over 1,000 properties represent 2%. But here's what makes this really problematic. The concentration varies wildly by location. In Atlanta, large investors hold 25% of the single-family rental market. In Jacksonville, it's 21%. In Raleigh, it's 18%. So if you're a first-time home buyer in these markets, you're not just competing with other families, you're competing with companies that can pay all cash, close in a week, and don't need mortgage approvals or home inspections. Joshua Coven from Baruch College found that in the markets where large landlords are most active, they account for about 20% of home price increases. Not because they're manipulating the market, but because they're removing homes from the ownership market and putting them into the rental market. This is why Trump's proposal might sound good politically, but the numbers show it's attacking a relatively small part of a much bigger problem. Here's the uncomfortable truth that most housing experts are saying quietly. Trump's ban on institutional investors probably won't make a meaningful dent in housing affordability. And the reasons why reveal just how deep this crisis really goes. Let's start with the biggest problem. Goldman Sachs estimates the U.S. needs to add 3 million to 4 million homes above normal construction levels just to ease residential real estate prices. We're not talking about a small shortage. We're talking about millions of missing homes. Daryl Fairweather, chief economist at Redfin, put it bluntly. The reason housing has gotten so unaffordable is because there's a shortage of homes. It's the shortage of homes that makes investors want to buy the homes because they see that there's scarcity. Think about that logic. Investors aren't creating the housing shortage. They're responding to it. Remove the investors, and you still have the same fundamental problem. Not enough homes for the number of people who want them. But here's where it gets more complicated. Many of these institutional investors aren't just buying existing homes, they're actually building new ones. American Homes, for rent, one of the biggest players, got 95.7% of their single-family acquisitions in 2025 from their in-house home building unit. Their construction division ranks as the nation's 37th largest home builder. Housing analyst Kevin Erdman warns that banning institutional home buying could actually hurt new construction. American builders have been completing about 1 million new single-family homes annually since 2020. That is roughly equal to the number built at the bottom of the 1982 recession, and just over half the rate that was typically built throughout the 20th century. So if you ban the companies that are actually building homes, you might end up with even less supply. Then there's the rental market problem. Joshua Coven's research found that large landlords actually decrease rents by contributing to rental supply. Ban them from buying homes, and you could see rents go up as rental supply tightens. Higher rents push more people toward home buying, which increases demand for homes when supply is already constrained. Rick Palacios from John Burns Research put it this way. Institutional investors get so much buzz, it's really easy to pick on. You're hard-pressed to put a bull's eye on this industry when you actually look at the hard statistics. The data backs this up. The rental market is still dominated by mom and pop investors who own fewer than 10 homes. They account for 14% of purchases. The mega investors that everyone's angry about, just 2% of purchases. Ed Pinto, a leading housing expert, summed it up. Big investors have nothing to do with how the housing shortage got created. So if institutional investors aren't the real problem, what is? And what would actually fix housing affordability? 6. If you're invested in real estate or thinking about it, Trump's announcement creates both immediate risks and some unexpected opportunities. But the impact isn't what most people think. Let's start with the obvious losers. REITs that specialize in single-family rentals got hammered. Invitation Homes, American Homes 4 Rent, and similar companies saw their stocks crater because investors are pricing in restricted growth. If these companies can't buy more homes, they can't expand their portfolios. But here's what's interesting. Many of these companies have been shifting toward build-to-rent anyway. American Homes 4 Rent built 95.7% of their new acquisitions in 2025 rather than buying existing homes. If Trump's ban only covers purchases of existing homes, these companies might actually benefit by having less competition for land and construction. Blackstone and other private equity firms face a bigger challenge. They've built massive portfolios by buying existing homes at scale. A purchase ban could force them to focus on other real estate sectors, commercial properties, multifamily buildings, or international markets. For individual real estate investors, this could create opportunities. If institutional buyers are banned, there's potentially less competition for single-family investment properties. Mom and pop investors who can move faster and offer more flexible terms might find better deals. But there's a mortgage market wrinkle that could change everything. Current 30-year mortgage rates are sitting around 6.02%. Trump just ordered Fannie Mae and Freddie Mac to buy $200 billion in mortgage-backed securities to try to bring those rates down. If that works and mortgage rates drop to 5% or lower, you could see a surge in home buying demand from regular families. That would put more pressure on prices, potentially offsetting any benefit from reduced institutional buying. Here's what investors should be watching. First, the definition of large institutional investor when the actual policy gets written. If it only applies to companies with 1,000+ properties, most investors won't be affected. If it includes anyone with 100+ properties, that catches a lot more players. Second, enforcement mechanisms. Will this be a complete ban or just additional restrictions and taxes? A tax on institutional purchases might slow them down without stopping them entirely. Third, the build-to-rent sector. Companies that build new rental homes rather than buying existing ones could see increased demand if traditional investors are restricted. For REIT investors specifically, diversification matters more than ever. Single-family rental REITs face regulatory risk, but multifamily REITs, commercial REITs, and international real estate could benefit from capital flowing out of single-family investing. The bigger picture for real estate investors is this. Housing demand isn't going anywhere. 46 million Americans are renters, and most can't afford to buy. Whether institutions own those rental properties or individual investors do, someone needs to provide that housing. But the rules of the game might be changing faster than anyone expected. 7. Here's the harsh reality about fixing the housing market. Every solution creates new problems. And until we understand why, we're going to keep chasing policies that sound good but don't actually work. Let's walk through what happens with each proposed fix. Say you want to make homes cheaper by increasing supply. Sounds great. Build millions more homes and prices should fall, right? But if home prices fall significantly, you've just made millions of current homeowners underwater on their mortgages. That can trigger foreclosures, which crashes the broader economy, like we saw in 2008. Okay, so instead of dropping home prices, let's make monthly payments cheaper by lowering mortgage rates. Trump's already trying this with his $200 billion Fannie Mae directive. Lower rates from 6% to 3%, and suddenly monthly payments become affordable for way more people. But now you've got more buyers chasing the same limited supply of homes. More demand, same supply equals higher prices. You're back where you started. Fine, so let's attack this from the demand side and ban institutional investors like Trump's proposing. Remove some buyers from the market and maybe prices stabilize. But institutional investors aren't just buying homes, they're also building them and renting them out. Remove them, and you could get less new construction and tighter rental supply. Higher rents push more people toward buying, increasing home buying demand again. Here's the fundamental problem nobody wants to admit. Housing is both a necessity and an investment. Americans have $45 trillion in housing wealth. Any policy that makes housing more affordable for buyers makes current homeowners poor. Any policy that protects current homeowners keeps housing expensive for everyone else. The only real solution is the one that takes the longest and gets the least attention. Build way more housing where people actually want to live. Not just any housing, but the right kind of housing. We need to build 3 to 4 million more homes than we normally would. But here's what makes this hard. Most new construction is happening in the suburbs, where land is cheap. But most job growth is in expensive metro areas, where zoning laws make dense housing nearly impossible to build. Take California. The median home price in San Jose hit $1.6 million in 2025. But local zoning laws make it illegal to build apartments or condos in most of the city, so you have some of the highest paying jobs in America in places where it is literally illegal to build affordable housing. This is why some economists think the real breakthrough will come from zoning reform, not federal housing policy. When cities allow duplexes, townhomes, and small apartment buildings in neighborhoods that were previously single-family only, housing supply can increase without sprawling into new areas. Minneapolis did this citywide. In 2018, Portland followed. Other cities are starting to experiment with what planners call missing middle housing homes that are denser than single-family houses, but not as dense as high-rise apartments. But even zoning reform creates winners and losers. Existing homeowners often oppose it because more housing supply could hurt their property values. It's the same political problem every housing solution runs into. The uncomfortable truth is that we probably need wages to rise faster than housing costs for several years running. Not through government policy, but through economic growth that outpaces housing inflation. That's happened before. It's how the housing market became affordable for the middle class in the first place back in the 1950s and 60s. But that takes time, patience, and economic policies focused on growth rather than quick fixes. Trump's institutional investor ban might happen. It might even help a little in specific markets. But it's not going to solve the housing affordability crisis any more than any other single policy would. The real solution is building millions more homes in places where people want to live, and accepting that's going to take years, not months. That completes the full script. Let me know if you'd like me to adjust any sections or add a conclusion call to action.